Hey guys, I hope you had a great weekend. Today we'll be taking a look at a few chart analysis as usual. If you love the content, please leave a like, subscribe, and share with friends. Also, don't forget to check us out on Instagram. There's a ton of important information there that you could learn from. So we'll be starting with gold. This is a gold chart on a daily time frame. Okay, so as you can see, we've got this nice, bearish trend within this channel. Okay, this is a descending channel, and we've got price action of gold slowly grinding downwards. And if you take a closer look, you will notice that we've broken through our weekly support level. Okay, so this is the area where we have had our weekly support level for some time now, and we've talked about this intensively over the last few weeks. Okay, if you're following us on YouTube, you'd have understood what I'm talking about right now. So I'm not going to talk much about the weekly support level because clearly it has been broken on the daily time frame. Okay, so this is the daily chart. We're going to focus more on what's going on down here and how we can take advantage of this bearish price movements in gold. So now moving on to the lower time frame. So I'm going to start with the 2 hours chart. Okay, so 2 hours chart, we are clearly within this bearish channel on gold. Now we can clearly see that we broke through this area of value. We had a consolidation here as we expected from our weekly analysis last week. From our analysis last week, I talked about waiting for some sort of bearish continuation pattern before going short on gold. So we talked about something like this, so waiting for a move like this, a consolidation, then a bearish breakout. So if you followed our analysis last week, you would have expected or anticipated this move and taken advantage of the bearish movement on gold. So what we have here right now is a confirmation of a bearish continuation pattern. Okay, so we had a huge breakout from this area of value, then we had a consolidation, and now we had another breakout, a retest, and we're having some sort of consolidation right now. So I'm going to go lower, so 1 hour time frame. I'm going to try as much as possible to go as fast as I can with this analysis so I don't spend too much time on this video. So right now you can see we had this consolidation, we had a breakout, we had this retest, and now we're having a slight consolidation here. But something else to pay attention to is that we are having price around the oversold level on the RSI. So this could eventually go up. So, and there's also some slight sort of bullish divergence here. So we have this, and if you take a look at this lows on the RSI, you would find out that we are having a sort of a bullish divergence. So we could see something like this next week. So we could see gold going upwards, then making a bigger consolidation here before breaking to the downside to give us the opportunity to go short. So if this happens, then you should also see the RSI move into the safe zone where we can actually open a safe sell position with no fear of opening a sell trade when the price is being oversold. So this is something I'll be watching out for gold. And this heavy volatile move here was as a result of the interest rates on Thursday last week. Okay, so we had the United States increase their interest rates by 75 basis points yet again. That's the reason why we had this massive volatility with this bearish move, a bullish move, and then a bearish move. So before we eventually had this bearish breakout on Friday. So this is something I'm watching out for. I'm not expecting any huge fundamentals this coming week, except for NFP, which will be coming up next Friday. Okay, so that's something to pay attention to as you trade these currency pairs or commodities like gold. So once again, there's a bullish divergence here. So I don't know if this is going to if the price action is going to respect the bullish divergence when we wake up in the morning tomorrow. But I believe if we're going to see price respect this bullish divergence, then we should see some sort of price action, a reversal going up, probably touching this broken level once more before making a bearish dump. That's if we are going to go higher, but I don't expect we go way higher than this area of value. Okay, so I think if we're going higher, we're going to retest this level, consolidate a bit before going downwards. But if the dollar tends to be strong on Monday, we could see a sharp decline on gold, okay, down to the bottom of our channel on the daily time frame. But I don't expect this to happen. I expect more of a slow steady grind on gold, so a retest or probably not a retest, but some sort of consolidation for the market to breathe a little before we get this bearish, breakout. But for now, I wouldn't be, looking forward to taking a buy trade on gold, because everything seems to be bearish right now because the dollar is so strong. So I've been talking about this for a few weeks now. The dollar is strong. So for the major currency pairs, having the USD as the core currency, always look forward to open sell trades, because with this principle, you'll be trading along with the trend. Okay, so we're going to take a look at EUR-USD, GBP-USD, and a few other currency pairs, so to get a clearer understanding of what I'm talking about. But for gold, this is what I'll be watching out for, and I would be targeting lower levels, so levels as low as the support level of this channel. Okay, so I would expect us to come as low as this level before we start talking about or start anticipating bullish price movements for gold. But if we don't get here, I'm also going to wait for this bearish confirmation to go short, but I'm going to trail my trade, go as low as we can go, take as much profit as I can take, and wait to see how the market reacts to what's going on in the global economy. Okay, because it's clear that most of the world's global economy is going into a recession right now. So the UK, Europe, Canada, US, we are all going into a recession. So it's really a bad time. So this is one way to also take advantage of the market, by following up with fundamentals. So the fundamentals is pointing to us that the DXY, so the dollar strength index, is strong. So for major currency pairs having the USD as the quote currency, look forward to open sell trades in line with the trend. Okay, so this for gold. So we're going to wait for that bearish continuation pattern or a retest or some sort of a cool off in the market before we go short. And we're going to target these lower levels of the channel before thinking about possible entries to go long. Meanwhile, even if we don't get to the bottom of this channel, we can also wait for some sort of bullish move and a confirmation that the trend is probably going to reverse. But I don't think we're going to see anything like that anytime soon, until there's a bit of a cool off with the DXY. So that's it for gold. I'm just going to repeat once more. I'm going to wait for price to cool off. So this is the 1 hour time frame. So we're going to wait for price to cool off, probably see some reversal here, because there's some sort of bullish divergence here. So I'm going to wait for a reversal, some consolidation before we go down. So mind you, price could open on Monday and dump, but I'm not going to rush into any trade right now. So I'm going to wait for something like this before going short. Okay, and I'm going to also watch out for the RSI to go back a bit into the safe zone before going for a short position. So that's it for gold. I'm going to check EUR-USD right now. So EUR-USD, same thing with gold. Okay, this is the 12-hour chart. We've been in a bearish downtrend within this channel, and last week we talked about how we could take advantage of the next bearish move, and I believe so many people caught that trade. It was just a nice one. Okay, so I'm going to show you what we did last week, just a quick recap. So we talked about using the Fibonacci retracement. So I'm not going to go into all that in this video. I'm just going to show you how I'm going to be taking my next trade for EUR-USD. So we drew something like this. So we talked about waiting for a break of this level in order for us to go short. So I'm going to get rid of this to make the chart a little bit clearer. Okay, so we talked about waiting for this trend line to break and a break of the support level before we go short. So at this price level, would have been your entry to go short on EUR-USD with your stop loss above this high. Okay, so that would have been a silly trade, a crazy trade. Okay, so this was around 280 pips. Yeah, so even if you missed this entry, this consolidation here, remember I told you after a significant breakout, in order to continue the breakout, we have to wait for bearish continuation patterns, so like we had here. So just to show you what I'm talking about, so we had this, excuse me, I'm going to get rid of this and this. So we had this breakout, so I'm just going to use this. So we had a breakout from this level. So in order to confirm that this trend is going to continue, we had this consolidation. So this is a bearish consolidation, and we had another breakout continuation. Okay, so now we went down here and we had a slight consolidation and then another breakout. So this is how you follow trends. Okay, you wait for the breakout, significant move, wait for a consolidation, a break of that consolidation, significant move, wait for another consolidation. So that's how you actually ride trends with chart patterns. Okay, so what I'll be watching out for is some sort of, a bearish continuation pattern again for me to go short on EUR-USD. Okay, so mind you, this might not be as big as what we had here, or even as big as what we had here. So it might take a day, it might take 2 days, it might take a week. So you never can tell. But all you have to do is be patient enough to wait for a pattern that gives you a clear breakout. So this is a very good example. Okay, so you see this pattern, we had a breakout from this level, we dumped, and we had some sort of reversal consolidation, and you can see this actually made a support level, okay, which gave us this breakout to tell us that price is going down, and you could easily open a trade here. So if you are scared, take a low risk trade, open here, then your stop loss will be above this high or above this high. So it gives you a better risk to reward ratio. As you can see, above this high here, stop loss would have been 45 pips, and your take profit right now is at 140 pips. Good risk to reward ratio when you wait for this consolidation to signify that we are going lower or we are going higher. So this is something I'll be watching out for before I open a sell trade on EUR-USD. Okay, mind you, we might open on Monday and get something like this and just go down. So if this consolidation is not clear enough to give me that confidence to open a trade, I am not going to go in. Okay, so I'm going to wait for something, more, solid in order for me to open a sell trade for EUR-USD. So something like this. Maybe it might take a day or two, then a bearish breakout for me to consider going short on EUR-USD. So this is what I'm going to watch out for before going short on EUR-USD. So this clearly shows us that this is a step-by-step formation in a bearish continuation pattern. So something like this. So we had this bearish move, so we had this bearish move, a consolidation, another bearish move, a consolidation, a bearish move, another consolidation, then a bearish move. So these are I trade and it has worked well for me over the years, and I implore you to also follow up with this strategy. So these are market moves in waves. Okay, so maybe one of these days I'll take my time to teach about Elliott waves, because they are very important in order for us to successfully follow trends. So this is what I'm going to watch out for to go short on EUR-USD. I'm going to target the bottom of this channel we have in the higher time frame, so like the 6 hours time frame, for example. So I'm going to watch out for this in order for me to set my profit target. So the reason I also wait for confirmation or consolidations like this is because it gives me a better risk to reward ratio. Okay, so if we get a consolidation like this and a breakout, then I can easily put my stop loss above the consolidation. So my stop loss is going to be around this level, okay, around these highs, and my take profit is going to be at the bottom of this channel. But if I was not to wait for this consolidation and just open a sell trade here, then the logical place to put my stop loss would be around here, okay, or around here, you see. So this will not be a good risk to reward ratio. But if we wait for this consolidation, so if we wait for consolidations like this and a breakout, then we can clearly get good risk to reward ratio, because our stop loss will have to be around this level. Because if we break these highs, it means we have violated the trend and there's a possibility of going higher. So there's no need to hold the trade for long if we violate these highs. So that's also one of the reasons why I wait for consolidations, because they give us this sense of confirmation and great risk to reward ratio to open better trade positions. So that's it for EUR-USD. Moving on, I'm going to talk about GBP-USD. It's very interesting and something to pay attention to. Okay, so this is a 2 weeks time frame for GBP-USD, and last week or 3 weeks ago we talked about price bouncing off these lows here. Okay, so we had these lows. I'm just going to zoom in a bit. So we had these lows from 2020, and we talked about how price could bounce off these lows. So we had price rejection off of these lows, and we took some good trade. But last week we broke through those lows and we had a target of this other low. So in our previous video I talked about this, and I expected us to come to this lower level. So this level is dated back to 1985. So this is over 20 years ago. Okay, this is over 30 years ago or 35 years ago, as the case may be. We've had price now coming down to this level. So I don't think we are going to break through this level that easily, because if we break through, then we're going to be in price discovery for GBP-USD. As you can see, the current price is at 1.085. So the British pounds is basically just 8%, 8.5% higher than the US dollar right now. This is just crazy. Okay, this has not happened in over 30 something years or 40 years. So this is what we'll be watching out for this week. So as price comes into this level, I'm going to open a long position. Okay, I'm just going to trade the bounce. I'm not going to wait for confirmation or anything. It's a risk, I know, but trading, sometimes you have to take those risks. So this is a significant level. I'm going to take a bounce off this level if we get there. So I'm going to go down to the lower time frames to see how far these levels actually are. Okay, so this is it. So the distance from the current price to those lows is 300 pips. So this can also be a good opportunity to go for a sell trade. Okay, so if you want to go for a sell trade to target these lower levels, because there's basically nothing holding GBP-USD right now from coming down to this level, so you can wait for a consolidation like this. Okay, like I explained, EUR-USD and a sell. So this will be an opportunity to go short, targeting these lower levels, and then opening a long position for, you know, a double hit. So this I'm going to watch at. This is what I'm going to watch at for GBP-USD. I'm going to wait for a consolidation like this, and I'm going to wait for a breakout, a bearish breakout, to go short. Okay, we could as well go as high. We could as well go as high as these levels. Okay, come down like this, then go down. So we could do something like this. We could move straight down without, you know, anything stopping us. So we could just do something like this and go down. You never can tell, but something like this, I wouldn't be going short, because it doesn't give me that risk, that good risk to reward ratio I'm looking for, and it doesn't give me a good trade entry. But if we should get a bigger consolidation like this, then I can go short on EUR-USD, sorry, on GBP-USD, to target these lower levels, and I'm going to take a buy position from this level with maybe 50 to 100 pips stop loss, and I'm going to target higher highs. Okay, for GBP-USD. So that's how I'm going to trade GBP-USD. I'm going to be patient enough to get this consolidation before we go down. So just to show you a practical example of what I'm talking about. So as you can see, so as you can see, we had this consolidation here, right? So we had a breakout. So we had this breakout, and we had a retest of this area of value before we dumped harder. So another place to open a trade would have been around this level. Okay, so this would have been a good opportunity to open a trade. So just a low risk trade, low risk to reward ratio, because if you had opened a trade on this breakout, so I'm just gonna, yeah, if you had opened a trade on this breakout, then your stop loss would have just been here at this level. Okay, 40 pips, and targeting about 300 pips dump, or 350 pips as the case may be. So 350 pips. So this would have been a good risk to reward ratio. So I'm going to wait for something like this to happen here again. So something like this, so a consolidation. Okay, then a breakout for me to consider going short on GBP-USD to target these lower levels. So this is what I'm going to do to play this trend, and I'm going to trade accordingly. If I don't get this, I'm going to stay away, because right now we are currently oversold, extremely oversold on the 1 hour time frame. So that's the reason why I'm going to wait for a consolidation. So a consolidation will probably get us back into the safe zone before we plan our next move to go short. So that's it for GBP-USD. Next, I'm going to talk about crude oil. Very interesting chart as well. So this is a daily time frame. As you can see, we had this bullish move. I'm just going to zoom out a bit. So we've had this bullish move since the middle of 2020. Okay, since 2 years ago, we've had this bullish move for crude oil, and now we seem to be coming down. So I would expect price to, you know, get to this trend line first, a consolidation or a massive bullish reversal before we, you know, consider breaking these levels. I don't think price is just going to come down and break this level immediately. So this is what I'm watching out for. So we've had one rejection, another rejection, another one here, probably the fifth one or the fourth one, to, you know, decide if we'll be breaking this level or we'll be going higher. So this is what I'm watching out for. Going down to the lower time frames, I'm going to start with 4 hours time frame. Okay, so on the 4 hour time frame, we had this descending wedge. Okay, I actually took this trade last week. I went on a short position at this level and targeted the bottom. So I took profit about halfway to the bottom of this wedge. So we've had 1, 2, 3, now a potential fourth reversal. Okay, now as you can see, we've had a spiny top here on the 4-hour time frame, which is a candlestick reversal pattern, and this seems to be a bullish engulfing candle. Okay, because this green candle totally engulfs this red candle. So we're going to see what happens next week, and price also seems to be reversing back into the safe zone from the the oversold level on the RSI. So this is something I'm going to watch out for. So going on the lower time frame, so let's see 2 hours time frame. Okay, so you can see series of green candles showing us some sort of bullish momentum coming up for the crude oil. So we could go as high as, to retest this, we could go as high as retesting these levels, consolidating a bit, then before coming down. So this is something I'm going to watch out for to give me a good entry on crude oil. I'm not going to jump into a buy trade right now because there's no reason or no logical explanation as to open a buy trade right now. If we had price at this level, then I would have probably opened a buy trade here and put my stop loss at 50 to 100 pips, just a tight stop loss in case we are bouncing. There's one way to also take advantage of opportunities like this. You trade the bounces, but in this case I'm not going to be going long. The only reason I'll be going long is if we get something like this. So just give me a minute. So if we should get something like this, we have a consolidation like this, and it forms some sort of resistance level. So if it forms some sort of resistance level like this, then I'm going to go long on the breakout with my stop loss just below this level. So it's a risk because we are clearly in the bearish trend. So to go long, it's kind of like a risk on my part, but this is the only scenario in which I would go long for crude oil, targeting these highs here before looking forward to open a sell trade. Okay, so if I don't get this, I'm just going to wait for the market to do its thing. So I'm going to wait for price to, so I'm going to wait for price to actually go upwards, maybe probably touch this top, then look for an opportunity to open a sell trade targeting lower levels. So another way you could do that is also use the Fibonacci retracement tool to also mark out important levels to watch out for. So important area of reversals to open a trade. So taking this top, for example, to this bottom, we can see that price reversed at the 50% Fibonacci retracement level. So we had a dump, we had a retracement to the 50% level, and we had a reversal down to the bottom of this falling wedge. So taking the same principle, so this is the high to these lows. So if you take that high to these lows, you would also find out that the 50% level is just around this area of consolidation, okay, which corresponds or which would make us tap into this resistance level of the descending wedge for us to open a sell position to go downwards. Okay, so we might not get to this level, we might come to the 38% level. So it depends on how long it takes for us to make this move up. So we could grind slowly, just give me a minute. So we could grind slowly like this. So we could grind slowly like this, just come up, come down, touch the resistance level of the falling wedge, which would align with the 38% level and this area of value. So this could be another scenario in which this is going to play out, where we could take an opportunity to go short, or alternatively we could just go straight up. Okay, so we could go up like this, so just up like this so fast, and touch the 50% level, which will give us an opportunity to go short. So the only way to go long is if we break through this falling wedge, make a bullish consolidation, and then a move upwards for us to go. But I don't think that's going to happen this week. Whenever it's going to happen, I'm going to make a video on that to elaborate more on going long term. So for now, I'm just going to wait for a reversal, an opportunity to go short, and I'm going to take the short position and target the bottom of the rising wedge. Okay, so I'm going to go short like this. So I'm going to wait for something like this, so something like this, then opposite to go short, target the bottom of this wedge or this bottom on the daily time frame before I look forward to maybe opening a long position. So this is how I'm going to play crude oil. So something like this could also happen. Okay, it could happen like this, it could happen like this, and then we go down. So this is also something to watch out for, but this will be a low risk trade because this bottom could stop us for going up. I'm going to wait for that bigger consolidation before I open a sell trade on crude oil. So moving on, I'm going to talk about AUDUSD, almost the same with what we have on the EUR-USD and the GBP-USD, including the gold. So we've been ranging within this channel since May this year. So we had this move up, down, up, down. So right now we are currently sitting at the bottom of this channel. Okay, so we could get a reversal up, back up to, we could get a reversal back up to this, to the top of this channel before we come down again. We never can tell, but I just want to show you what we have on the chart so you could, prepare accordingly. And something also important to understand is that you can't be bullish on AUDUSD and be bearish on GBP-USD. Okay, so I'm going to go to GBP-USD and show you something. So you can't expect, excuse me, just give me a minute. I'm going to get rid of this. So you can't expect to be bearish on GBP-USD, expecting price to come to these levels, while you are bullish on AUDUSD, expecting price to come to this level, because right now the US dollar is the major mover of the market, and we have the US dollar as the quote currency in both the AUDUSD, GBP-USD and EUR-USD. Okay, so you can't be bearish like this on EUR-USD, bearish on GBP-USD, and also and then bullish on AUDUSD. So this might be a bull trap for traders. So you might be expecting this thing to reverse, okay, this AUDUSD to reverse upward. Meanwhile, GBP-USD might go down. So this should indicate that AUDUSD might probably break through this trend line. Okay, so we might make something like this and break through the trend line going downwards, because US dollar is the major mover in the market. So don't expect a massive reversal. Okay, so you could also see something like this. Just give me a minute. So this is for AUDUSD. So this is talking about currency pair correlations. Okay, so you could see something like this for AUDUSD, some sort of slight reversal. Okay, consolidation like this, and then a massive bearish move. So this move here would give GBP-USD enough time to consolidate, give EUR-USD enough time to consolidate. That's if we are going to go bearish. Okay, so even if you see some sort of bounce of this level, don't expect us to go as high as these levels. Okay, we might just go into this area of value. So I'm going to show you something. So we might just go into this area of value for AUDUSD, and that's it. So this a bounce off here doesn't mean we are going directly to the top of this channel. So we might get something like this. So I'm going to get rid of this so I can show you. So we might get something like this, something like a bounce, a retest of this area of value, a consolidation, then a bearish move, because the dollar seems to be strong at the moment. And if this was to play out, it's going to give GBP-USD the opportunity to also consolidate and go down, and also EUR-USD to consolidate and go down. So this is something we could watch out for. So what I'm trying to say is, don't expect, if we see a bullish reversal here, don't expect price to go up and come to these levels. I don't think that's going to happen, because the dollar is still strong at the moment. So this is something I'll be watching out for AUDUSD to go short. I'm not going to jump on a long right now because the dollar is strong. Okay, so I'm not going to jump on a long position right now, because the dollar could rip higher anytime unexpectedly. So trying to open a buy position because you feel this might be a bounce, it's not just the way to go. So I'm simply going to wait for a consolidation, an opportunity to go short, in order for me to go short with respect to the trend. Even if I miss the trade or I end up losing the trade, I would know and understand that I did my best trying to trade according to the trend, okay, according to the chart pattern I'm seeing, rather than trying to taking a guess and opening a long position when I know the dollar is strong. So that's it for AUDUSD. Moving on, this is unusual because I usually talk about major currency pairs. So this is something interesting I want to talk about. So this EUR-AUD, so this is a minor currency pair. So this is a 12-hour chart. Okay, so this is a bearish trend. We have a high here, another high, then another high. So there's a possibility of a bearish reversal here in order for us to open a sell position. So this is not backed by fundamentals. This is purely technicals and my opinion only. Okay, I'm not saying this is what's going to happen, but I'm saying this is something that's likely going to happen because we've seen something like this in the past. So this is just an example. So you can see from here we came down and we had this, consolidation back to this trend line, and we had this move. So now we are having a bounce off this level, a consolidation up to this level, and now we're having a reversal. So this could be a good opportunity to open a sell trade. So I'm going to check out if there's something significant on the RSI. Okay, so on the Fibonacci retracement too. So on the Fibonacci retracement, you can see price bounced off within the range of the 50% and the 61% Fibonacci retracement too. Okay, so going short around this level with your stop loss above the 61%, 61.8% level would have been a good trade. So if we should follow up with this price action and use the same principle, let's see what we have, if it's going to also align. So you can see this price bounced off this 61.8% Fibonacci retracement level, which closely perfectly aligns with the top trend. So this is one of the reasons why I picked this currency pair, because it poses a good opportunity for a sell trade next week. So I'm going to go to the lower time frame so we can see what's going on there. So this is a 4-hour chart. So looking at the 4-hour chart, you can see something like an head and shoulder. This is not a head and shoulder, okay, but it seems like that if you're looking at it from a broader point of view. Okay, so instead of picking it as a head and shoulder, you could take this as a symmetrical triangle. Okay, so taking these highs, so this is kind of like a symmetrical triangle. So if we should get a bearish breakout from this level, then that would be your confirmation to go short, targeting the bottom of the descending triangle. Okay, so let's say you're having this here, so waiting for a break of this trend line and a break of this area of value or this support level is one of the criteria to go short in this currency. I'm going to go down to the 2-hour charts. So looking at the 2-hour charts closely, you can see this is a clear support level. So we have one reversal here, 1, 2, 3, 4, 5. So if we should break through this level, so if we should get something like this, a break through this level, a retest, then this will be an opportunity to go short, targeting the bottom of this triangle. So this is another currency pair I'll be watching out for this week, and I'm going to go short on this. Okay, so if we should get a breakout above this level, then I'm not going to go short. I'm not also going to go long. I'm just going to let this run. Okay, I'm just going to let this run. I'm not going to go long. I would only go short because going short corresponds with the overall trend of the market, because you can see we're having a descending triangle. Okay, so this is kind of like a descending triangle, so there's a bearish pressure. So if we should get this breakout, I would go short, targeting the bottom of this triangle. So lastly, we're going to talk about Nasdaq. Nasdaq has been a it has given so many good trade opportunities in the past. So now we are coming close to the bottom of the Nasdaq, okay, from our June lows. So there are two questions: are we going to bounce off these lows, or we are going to break through these lows, putting in a lower low? So something I would expect is, if I use the Fibonacci retracement tool, for example, taking this high down to this low, you can see we had a reversal at the 50% Fibonacci retracement level. Okay, so now if you take this high, so this is a swing high, to these current lows, then you can see the 50% Fibonacci retracement level lies at this area of value. So we could potentially see a price reversal from this level. So you could see a price reversal up to this level before we get a dump. Okay, so this is something to watch out for if you will be trading the Nasdaq, because this level closely aligns with the 50% Fibonacci retracement level, and it would also align with this trend line. Okay, so we might not get something like this, but I'm just saying this is what I'll be watching out for. Okay, so if we get price coming down to these lows, so if we're going to bounce off this low, so we're going to see something like this. So the 50% Fibonacci retracement level is going to come down a bit. So we're going to see something like this. We'll probably see something like this up to the 50%. So we might see something like this. So a move up to the 50% Fibonacci retracement level, and then a dump, just as we saw here. So we might see something like that again before we go down, or we could just get something like this, a bearish consolidation and then a dump. So these are two scenarios for me to go short on Nasdaq. So I'm going to wait for something like this. which would give me an opportunity for a good entry with a good risk to reward ratio for me to go short. So we could get something like this, I'll go short, or we could get a higher extension of price movement up to the 50% Fibonacci retracement level or this trend line for me to go short. So that's it for today's weekly analysis. I hope it helps. If you love the content, guys, please like, leave comments, share with friends, and don't forget to check out our Instagram page. That's all for today. I'm going to see you next week.